Good afternoon, people. I myself Falak Agrawal, and along with my friend Jayesh Dialani, we are the consulting students of PGDM Business Design from Wellington Institute. Today, we are going to decode the excellent business transformation of Mahindra and Mahindra and the current, you know, the buzzword of the industry, that is the EV segment. We are gonna break it down and tear it apart and analyze this transformation from scratch.
That's right, Falak. So Mahindra has gone from a traditional Indian conglomerate to a serious player in the electric vehicle space in 2024-2025 alone. So Mahindra sold over 5,51,000 SUVs, their highest ever, and even emerged as India's second highest SUV seller by volume for some months. That's kind of a shift that deserves a deep dive.
Let's set the stage, Jayesh. Give us a snapshot of what Mahindra really is, because it's more than just Thar and Scorpio, right?
Absolutely. Mahindra is a 75-year-old conglomerate present in over 100 countries. They are spread across sectors such as tractors, SUVs, IT, finance, logistics, solar, real estate, and even through hospitality through the Club Mahindra. Right. So that diversity created complexity. And while they were the world's largest tractor manufacturer by volume, the passenger vehicle division needed a direction, a focused direction.
Okay, so tell me, Jayesh, what really triggered this need for change or what led this change?
Competition mainly, in particular to the mid-size SUV segment. They were losing share to Tata, Hyundai, and even Maruti. At the same time, EVs were becoming the next big thing. Tata was dominating the EV market share with 68%, which is a huge percentage that they had. But Mahindra had no real contender in this space and had to either pivot or risk becoming irrelevant.
Wow. And EVs aren't just a trend, they are a necessity now. What is your opinion on that?
Exactly. In the first half of 2025, Mahindra sold over 74,000 electric passenger vehicles. That's already 75% of what they sold in the 2024 year. The EV transition is very real.
What else was happening in the Indian market?
SUVs became a dominant segment with over 2.8 million utility vehicles sold in FY 24-25, right, exceeding all passenger vehicle sales of FY 2016. So Mahindra tapped into this trend and used it as a launch pad for reinvention, total revolution, right? So the next point being how they focused on certain products, which being focused in the SUV segment.
Okay, so they weren't just responding to EV growth or they were also riding the SUV boom, or what was happening?
Exactly. SUVs made up to 50% of India's passenger vehicle sales last year. Mahindra decided that to own that space basically, capture it completely with products like Scorpio and Thar, XUV700, and now transitioning to the EV segment.
So let's talk about strategy now. How did Mahindra do this and what did Mahindra do differently?
Well, they zeroed in on the categories where they could lead. SUVs and tractors. Of course, for tractors, they already were and still are the number one manufacturer in the entire world. So, with respect to the SUVs, right, and coming to the EV space, they built the Inglo platform, a modular EV architecture, launched the Born Electric sub brand. Most importantly, they enforced an 18% ROCE benchmark for any new capital deployment, which of course we'll discuss further on in the episode.
So does that keep strategy grounded in profitability?
Exactly, and it worked. Mahindra's EV business saw a 343% year on year sales increase in the first half of 2025, which is absolutely huge, penetrating the market deep, and now holds 17% of the India's electric market, an impressive rise considering that they launched their first real EV SUV last year, which is the BE6 and XEV9.
Execution makes or breaks strategy. So tell me, how did Mahindra deliver through this?
Well, let's start with a product like the Thar. They sold over 65,000 units in FY25 alone, which is huge numbers compared to their competitors. And of course the total sales crossing around 2.6 lakh, which is a lot since their launch basically, right? And even let's say products like XUV700, which has till date sold after they launched from 2021, around 3 lakh plus units, which is completely capturing the market. So they consistently are ranking in the top 5 best-selling SUVs, right? And then come their EVs, the BE6 and the XUV9, launched in November 2024 last year. Right? The models kicked off the born electric era, and guess what? The numbers are the for example, the BE6 and the XUV E9, both combined have received an order of 30,000 units already, and they are manufacturing like crazy, right? So they are absolutely revolutionize the electric market in India.
And did they back it with funding?
Yes, of course. Mahindra secured 1,925 crore rupees investment from the British International Investment Company and signed component deals with Volkswagen. Right, so this wasn't just a design upgrade; it was a full ecosystem reboot for their EV system. Right.
So, bottom line, did it work?
Absolutely, it did. So Mahindra's SUV market share has risen to approx 22% by mid 2025, making them India's top selling SUV brand by volume. And the EV division is now third largest in India, which is, guess they just launched last year, late of last year, and still they have, managed to get to third largest position, which is a dramatic increase in these past months, right? Just behind Tata and MG Motors. And their Tata's and MG Motors share is gradually declining also. So, yeah, Mahindra is here to stay and absolutely capture the market.
So tell me, Jayesh, what should other companies take away from this revolution that Mahindra caused in the market?
For that, I'd say focus beats diversity. Discipline in capital drives growth, right? So EVs need, long-term product and platform thinking. The Inglo platform, for example, right? And most importantly, reinvention isn't a quarterly move; it's a structural change. So, Falak, as we've had the market context for Mahindra and Mahindra, can you help us understand? I mean, any deep dive is incomplete without the financials, which is a very important aspect for Mahindra and how they've been able to achieve this. We were talking about the financial shape, the 18% ROCE, right? How can we basically understand this? If you can, shed some light on it, Falak.
Sure, definitely. So look at the fundamentals. Mahindra has a stellar 18% return on equity and is virtually debt free. Their credit rating is a fortress like AAA. This gives them immense power to invest as well, and they are investing it where it counts, the SUV market.
And that's their kingdom, isn't it?
Surely yes. Mahindra and Mahindra isn't just an SUV player. They are the SUV player, commanding over 22% of the revenue market share. They have had knockout launches like the new Thar, which won Car of the Year, and the XUV 3XO as well. They have iconic brands, Scorpio, Bolero, that are deeply entrenched in the Indian psyche. Tata has good products, but Mahindra owns the SUV narrative. They have a clear plan to launch 23 new models by 2030 to fortify this leadership.
Okay, so Mahindra is the undisputed king of the SUV hill, right? But the future is electric, and that's Tata stuff, right?
Exactly. Here the roles are completely reversed. Tata Motors played its cards perfectly. They were early and they were smart, electrifying their popular models like the Nexon. The result? A staggering 69% market share in electric cars. They are the EV market in India right now.
Well, I mean, so how does Mahindra even begin to challenge that?
With a war chest and a bold strategy. Mahindra has earmarked a massive 12,000 crores for its EV business. Crucially, they aren't just putting barriers in their existing SUVs. They have developed a born electric platform called Inglo. Their new BEVs, launched to huge initial bookings, are built from the ground up as premium electric vehicles. They are also dominating the electric three wheeler market, which is a huge part of commercial EV adoption.
So we have a fascinating split. Tata leads in the EVs, Mahindra leads in the SUVs. If you were to put your money on any one of them in the next 5 years, so Falak, who would you go for?
It's the toughest question in the Indian auto sector as of now. Tata has the current momentum and the EV crown, but Mahindra's financial discipline is second to none. Their focus on the highly profitable SUV segment gives them the cash to fuel their ambitious EV plans. I believe the battle will be won by execution. Can Tata defend its EV lead while making a serious dent in the core SUV market? Or will Mahindra's Born Electric platform prove to be a masterstroke, allowing them to leapfrog Tata's current technology? My view is this: while Tata is the current leader, Mahindra's financial strength and focused aggressive strategy in both SUVs as well as the EVs give it a slightly stronger long term edge. They are a challenger with the heart and the balance sheet of a champion. It's going to be a phenomenal race to watch.
A challenger with the heart of a champion. I like that, fella. Thank you for breaking that down for us.